Bitcoin continues to fight to stay above 40,000 as the market digests the historic ETF launch. It's also a big week ahead for a number of altcoins that we look forward to breaking down, as I'm joined today by Nick for our Collective Shift weekly recap, actionable insights, and a breakdown into the crypto market, all in under 30 minutes. As always, we'll kick things off with a market update, followed by breaking down the most impactful and significant news and developments in the space in the past week. We also talk about things happening in the week ahead for certain altcoins and just in general as the overall market. So kicking things off with how the market has performed in the last 7 days or so. Again, it's been relatively flat over the course of the week with BTC, well, it's up 1% for the week, and ETH, which notably had really started to outperform the market after the Bitcoin ETF went live. We've seen a reversal in that. So once again, ETH struggling to sort of come under the spotlight and get all the attention. So that's down 8% for the week. One notable talking point from Bitcoin's price action in particular is whilst it's up 1% for the week, notably during the week, it did actually momentarily go below 40,000, which was, again, a key psychologically significant sort of price level. And we saw it quickly, some heavy buying once it did briefly dip below that, and heavy buying going back above 40,000, and over the weekend here back towards 42, 43,000. So good to see them defending that 40,000 barrier there, and we'll see what happens in the week ahead. One notable sort of macro item there in the week ahead, of course, is outside of crypto, is the US interest rate decision. So the Federal Reserve meeting for the first time this year, and they will be announcing January 31st. That's in the US. They will be announcing their latest rate decision. The market widely expects it to be, no change at all to rates. However, most importantly is going to be the commentary from the chairman of the Federal Reserve, Jerome Powell. His comments, are likely to be heavily sort of scrutinized, and that may or may not sort of impact the outlook for, rates going forward. Of course, we know, really, broadly speaking, lower rates are better for crypto in very, very simple terms. The market has started to, price in some rate cuts happening this year. So an update from Jerome Powell will be a real crucial commentary there. But I'll head over to you, Nick, in terms of, some more, things that are maybe adding to the supply demand dynamics for Bitcoin recently.
Yeah, it's been I think the sell pressure on Bitcoin has been, the topic on everyone's lips to start off the week, and since the ETFs have went live. So we got some more data now that I think we've had about almost 2 full weeks of trading since the 11th. So more than enough data to look at the inflows, the outflows, and just to see how much Bitcoin has been, dragged down, which it looks like we've been seeing more outflows recently. A lot of this I've been noticing is due to Grayscale and their redemptions, as well as FTX selling. So I'm not sure if you've seen this one in the news, Matt, but Grayscale, they've been dumping a lot of Bitcoin, and a lot of these people who held their GPTC product, which I think it got at about a 50% discount at its peak. These people that were in the market to arbitrage that, are finally kind of exiting those positions now that discount or arbitrage is basically zero or just about 1%. So this has resulted in a lot of outflows. So has FTX, who's been reported by CoinDesk, that has been selling about $1 billion worth of Bitcoin on the market. So they've been using this opportunity now that a lot of these ETFs are liquid to get some more money back for their creditors by dumping a lot of that Bitcoin they had. So this is just resulting in a lot of sell pressure on the market, which probably is contributing towards this, slight sell the news event after the ETF. And also, maybe it's up there that they've had about, I think, the highest level of outflows in the last day. I think we've seen 4 consecutive days of net outflows. So these outflows are picking up, and we're going to kind of continue to see whether that FTX selling is over. Now it looks like they may have emptied a lot of the Bitcoin they were holding, and perhaps all these Grayscale holders who finally can become liquid, have finally started to sell. So that's one thing I'm looking at in the next couple of weeks is, will this trend start to reverse, and whether we're going to see these net inflows start to come into the market?
Yeah, it's been quite noticeable. Yeah, just the dialogue really. It's all, September, October, November, December, all this anticipation for the launch of the ETF and where all the demand side is going to come in. And here you are in January after the launch. Turned out to be a sell the news event again, and all of a sudden the dialogue is there's been a heavy focus on the supply side, as in who is going to be selling in the short term, which was very rarely out of the discussion just a few months ago. It's interesting how the conversation can shift, and another source of that sort of sell side pressure on Bitcoin is definitely Celsius as well. So we're seeing almost the ghosts of 2 years past in terms of all of the the collapses in 2022 that are still having their effect on the dynamics of the Bitcoin and crypto market. Notably here, Celsius, particularly for the price of ETH, has been selling or unstaking a lot of ETH, and then also selling that in terms of covering its expenses, in terms of its liquidation process and whatnot. And then we've also got reports here that Celsius will be returning some capital to certain creditors in February. And that's it. That's in terms of in-kind BTC and ETH. So in other words, they're just giving back certain users of Celsius, the BTC and ETH that they did have in their Celsius account. And you would expect that maybe, it's obviously impossible to tell, but you would expect a portion of that to be sold. There might be certain Celsius users who keep that for a long time, but another thing that I think the market will be pleased and relieved to have out of the way once that does end as well. So to bring it back even to just BTC, again, just really want to emphasize this focus on sell side pressure. Yet another sort of piece of news that really caught a lot of headlines last week was in terms of the US government filing to dispose of around $117 million worth of Bitcoin, which is nearly 3,000 BTC. That does sound like a lot. However, it may surprise a lot of people that the US government actually is one of the largest holders of BTC out there. They do hold at the moment around $9 billion worth of BTC. How does it acquire this BTC? It's mainly through seized, when they seize different assets as a result of different crimes or incidents. The Bitfinex hack in 2016 was a notable one, and obviously going back further, the Silk Road hack in 2012. So they sort of incrementally sell this off to the public in certain auctions and whatnot. And another sort of large sale coming sometime this year. They didn't actually put a date on it, but they just filed their intent to sell. So this is something in terms of the US government selling Bitcoin. I think it's going to be something that is always in the background, given how much they have accumulated. But it's interesting that this filing to dispose came at a time when there was already such a, fear or even just concerns of who is selling Bitcoin at the moment, which is, as Nick said, FTX, grayscale entities, Celsius, and now even the US government. So, a lot of sort of, that's really, I think, describes and paints a picture of where the market is currently focusing, at least in the short term for now. Okay, we'll move on here to, Ethereum. So again, as we said, Celsius has been a big sort of putting some sell side pressure on ETH recently. However, as we've talked about in the market update, ETH is still underperforming, the market overall. And even in terms of its technical or technological aspects, has been running into some issues. So Nick, did you have this one?
Yeah, so this was making the rounds a lot in crypto circles, was concerns around Ethereum and one of its larger validators. So these are, the software really that powers the network, and Ethereum has multiple different implementations of this validator software, that really run a lot of these nodes. This really helps build a sort of more robust and battle tested network. So if one goes down or has a bug, there's others there that people can turn on and use, to try and help stabilize this. So the biggest question here is, because a majority have, I think it's about 85%, are running just one particular implementation of this software, which is Geth. And there's been a lot of concerns about whether that's a point of centralization, a point of failure. What if, there is a critical bug in Geth that results in widespread losses for stakers, contributes to a lot of panic in the network. This could potentially just pose a lot of issues for Ethereum. So Coinbase and I think Lido have come out all making public statements about whether they're going to try and distribute their use of these different software implementations. I've noticed that this has already went down from 85% to about 78%. So if you are moving to these other validator software, but I think a still huge point of conjecture is just now around this centralization. I'm not sure if you have any opinions there, Matt, or whether this is actually something people should be worried about, or if it represents a critical issue for Ethereum moving forward.
I think given Ethereum's value, how much they value decentralization, I think it's like, I think the argument's there that it is sort of, a critical, well, not a critical, but an important issue. However, once again, we've seen almost people talk about the social layer of Ethereum, how they're able to, I guess, maneuver and respond to certain threats in terms of, taking action and actually sort of going a certain way to sort of fixing a perceived issue. We saw that, I think, with the MEV blockers and whatnot about a year and a half ago. And once again, we're seeing that social layer come into effect with already, as you said, reducing the percentage. And I think even Coinbase and Lido have announced their intention to sort of progressively diversify their validator clients, which again, given how big those entities are in the Ethereum community, will again really help alleviate this this centralization vector of sorts. But impressive in the sense that they were able to sort of very quickly respond to that threat, which is something that I do think always impresses me about Ethereum. If it was another blockchain that didn't value decentralization as much, Nick, I don't think it would be as much of an issue. It really, I think, comes back to how much people value decentralization and how much they think censorship resistance, credible neutrality, things like that, like how important are they to, I suppose, the success or, actually using blockchain technology and smart contracts, how important is that feature? I think Ethereum has gone heavily in terms of, that is highly important. And it's sort of hindered, I think, their development roadmap because of how hard it then means to, make the blockchain more performant and whatnot. So that's always interesting to see. And ultimately, I think speaks to, I guess, the different designs of blockchains when you see issues like this, when Ethereum is probably one of the only blockchains out there that has multiple validator pieces of software. So it's really only an issue that they uniquely can be dealing with. So yeah, always fascinating.
It's a really interesting one because I've even noticed a lot of discussion ramp up talking about whether if something does happen to this validator client or even to Ethereum in general, whether we will see another DAO hard fork, and whether that social layer you talk about will really come into frame. Because it's one of these things I like reading a lot of history books, and I always think about the things that have always happened. If we look at Ethereum history, they've had multiple bugs, they've had a critical moment with the DAO. Will we expect Ethereum never to experience another DAO moment? So there's been a lot of conjecture around whether over dominance of a particular validator software or even potential challenges to Ethereum centralization will result in another DAO moment, which is something that I've noticed really is rising in concerns with a lot of industry pundits online.
Yeah, certainly. I think it's good to have those conversations ahead of time, importantly, and have it on people's radars, just in case that scenario does come out in the future. But yeah, we'll keep an eye on that dominance level, and again, important to get that lower, just in terms of the sustainability and the resilience of Ethereum. So yeah, a good piece of good in the sense that it's been in action, but an important piece of news that we want to put across your eyes or whoever's listening in the past week. In terms of altcoin updates, it's been sort of a quieter period typically in these summer months, around December, January. You see the main news aspect of crypto really start to slow down, and I think altcoins really take this time to really get under the spotlight and push their big upgrades or or some new projects coming out and announcing themselves. Seen a lot of airdrops and whatnot happening, and we saw more of the same in the past week. So it's been an exciting time in the altcoin space. Yeah, Nick, I heard there was some big news from the Solana space, a particular update or announcement from the past week.
Yeah, so Solana and the Solana Foundation announced the launch of token extensions, which was something they've been in development since I think about 2021. So something that they've been building for a while now, and have finally started to go live in a fully implemented nature. So what is token extensions? it might seem like jargon, but essentially increases the functionality of tokens for people who are issuing tokens on Solana. So it just means that creators that issue these tokens can do more with them, and they essentially have greater control over what they do, how they program the tokens, which could potentially unlock a wide variety of new potential use cases that we could see. So something that's been in development for a while. Big takeaway for me is just that it continually shows Solana and Solana Foundation's commitment to shipping, to creating new updates, creating new functionality, which could continually put it on par with other ecosystems such as Ethereum, which have extensive tooling, extensive development of ERC20s and what you can do with the tokens themselves. So I'm really excited to see whether we'll see any new use cases come of this. I think there are about 13 different use cases, and perhaps we can link the announcement and all these different potential use cases and exactly what they're doing for token issuers in the comments.
Yeah, nice. That'll be a really good development to see, and I'm sure they'll do a number of hackathons around this Solana token extensions as well, which is again always a great way for us and people out there to be checking in to see what actually use cases of the Solana blockchain in this case are there coming out, and what is possible. So yeah, good update there, Nick. I've got a big one from Arbitrum. So we saw in 2023 in particular this trend of all of the layer 2 solutions out there sort of launching their own software packages to really simplify it, to make it easy for someone to come onto Arbitrum and go, hey, I want to launch my own blockchain that sort of taps into Arbitrum and sort of communicates back to it. We know Arbitrum Orbit is the name of I suppose Arbitrum's version of that. I know Polygon's got Polygon CDK, ZK Sync's got ZK Stack. Basically every layer 2, as I said, has one these days. A big criticism of Arbitrum has been, the restrictions it had been placing on teams, because if they wanted to launch their own blockchain, it had to communicate and basically roll up back to one of Arbitrum's 2 rollups, those being Arbitrum 1, which is by far the most popular, or Arbitrum Nova. Again, that was viewed as quite restrictive by developers, as opposed to something like Optimism, which is a lot more, I suppose, freedom for developers to choose how they want to build their own blockchain. Arbitrum coming out last week with a really big announcement, basically opening up, I suppose, the optionality for different teams out there who want to build their own custom chains. So you can build, an Arbitrum layer 2 now, for example, that just rolls up and communicates or settles back directly to Ethereum, which again was not possible before. You can do a bunch of other different designs in terms of, again, really just opening up what's possible. So we saw layer 3 chains go live on Arbitrum. The first one late last year, the Xi chain, so XAI, which is really focused on gaming. Again, there's a number of reasons why you would want to do this, and why Arbitrum, I suppose, announces different benefits or promotes different benefits of building a layer 3 chain versus a layer 1 blockchain, for example, which we've covered for members a lot over the past 2 years or so, and we'll continue to do so, given this is such a dominant theme happening now in the industry. But Arbitrum Orbit there basically coming out with a much more liberating sort of update last week, and it comes at a time when honestly every other day there is basically a roll up announcing themselves or launching, or really a layer 2 solution, which is again
always out there. I think Arbiter Finance, who have really good data online that I use quite a lot, free data. They've announced their own sort of roll up L2. So we're seeing a lot of more, and are only anticipating more projects maybe pivot to L2s and we're just seeing increased competition with things like Optimism, who are going things in a very different way to Arbitrum, which I'm really excited to look forward to, and that's really on my list for 2024. Is whether we'll see sort of a winner take all in these L2, whether we're just going to continue to see many of these L2s pop up, and even some that are just trying to capture a narrative. So it's something I'm always careful of, because whenever I think a lot of these L2s, especially L1s that start to convert into L2s, that perhaps failed in the past, I no doubt we'll see a lot of L1s become L2s.
Yeah, definitely. That's why I think it's almost guaranteed to happen in the next coming months and year or so. The Jupiter airdrop is another one. Nick, I'll get you to cover this one.
Yeah, Jupiter's the biggest DEX aggregator on Solana. So think of 1inch, think of, you don't have to go through any particular, platform to get your tokens, just aggregate them into Jupiter and it gives you the best price. They're announcing their airdrop, and that's going live, I think, on the 31st. So towards the end of the month, maybe before this goes live, we'll see. But if you're a Solana Power user, even a small user, you may be eligible for that airdrop. So maybe we'll even include the tweet in this. And as always, be careful out there with a lot of these airdrops. You'll no doubt potentially try and be fished by going to a fake Jupiter website. But Jupiter's shaping up already to be one of the largest DEXs across the crypto ecosystem. I saw that it's pretty much number 2 to Uniswap, although Uniswap still does more volume across all of its different deployments. Jupiter's right there at number 2, and we'll continue to see whether Jupiter continues to have long-lasting use, which I think it will, even though some of that volume may be contributed to airdrop farmers. We don't know how consistent all that volume is, but if you're a Solana user, definitely hit up Jupiter to get in on this airdrop that's happening.
Yeah, definitely. I think exciting times for Jupiter in terms of launching different products that aren't just beyond their liquidity aggregator, I suppose, which is something we're starting to see a lot more in the past year or so, as projects now actually expanding into other verticals or domains to capture more market share. So that's something that for Jupiter I expect to continue as well. Avalanche Foundation, they've got Avalanche I think actually has an upcoming a large upgrade that people are starting to get excited about. But I suppose countering that, I think, has been the Avalanche Foundation, I suppose, in a bid to just get more really attention on their ecosystem, has started to buy meme coins essentially that have been deployed on Avalanche. So they're calling this the Culture Catalyst program, which with a bunch of reasons why they're launching it. But yeah, it's a first definitely that I've seen in the industry. And yeah, I just don't think a foundation, their role is to sort of make the ecosystem bigger and more, I guess, more growth sustainably. And I suppose funding meme coins or buying meme coins off the open market, how does that add to the sustainability of the ecosystem? That's something that I definitely would be questioning. So a bit of a unique sort of announcement there from Avalanche, and we'll see if it continues, if they actually use all the money.
Very shocked at this. I thought it was kind of a joke, to be honest. I thought it was one of those fake announcements, and that maybe the admin got a bit carried away on the account, but now it's live and they're actually buying meme coins, I saw. So I actually think it's a bad look for the space, especially when you have one of the biggest L1 blockchains, the foundation. You have court cases being fought. You have people disputing whether crypto has any utility, whether it's just speculative. But then you have like the foundation from one of the biggest blockchains in the space. You just buy meme coins and encouraging like speculation on rubbish, meme coins people just creating in a bid that their meme coin gets bought by Avalanche Foundation. So yeah, not a good look for me. And although Avalanche actually has some potential good upgrades coming up, and I was actually quite excited about forming foundations, partnerships with subnets, potential use cases in like the KYC space that I reckon have real legitimate usage, but it's kind of overshadowed now by this kind of weird meme coin buying, which I find very odd.
Yeah, so especially when you just lastly on this, when you think about their push, their trying to find product market fit in the institutional space as well. Like if you're JP Morgan or Franklin Templeton or whatever, some entities that have worked with Avalanche in the past 24 months or so. And from the Avalanche Foundation and Avalabs perspective, they're trying to almost, take those partnerships or collaborations to the next level. I'm not sure what the staff members or team members at those respective financial institutions will be thinking when they see an announcement like this. I'm sure there might have been some words said behind closed doors. You'd like to think so. But we'll see how this plays out, whether they actually deploy all the funds or not. Time will tell. But an interesting update there. Just some quick ones to whip through here. Just Terraform Labs, so the entity that was behind the failed Terra cryptocurrency, they did file for Chapter 11 bankruptcy, last week. I know there is sort of a spin-off sort of project that's trying to, revitalize the Terra protocol, but, those sort of names continue to sort of come back in the space. We got a cash network here. They actually reached all-time high usage in terms of from the perspective of active leases. So Akash really did outperformed heavily last year, partly because of the ChatGPT and the LLM sort of big hype around that, and all the AI tokens really performed well, whether it was warranted or otherwise. Akash is sort of taking that momentum and continues to really see some strong activity. And just finally here quickly, Asteroids, they did launch, bringing inscriptions to the Cosmos ecosystem. So we've seen inscriptions deploying on basically every blockchain, most notably Bitcoin about December 2022. They've really taken off and formed their own ecosystem, and Cosmos looking to get the same here through this Asteroids project. So notable there, and a lot of developments happening in the altcoin space, as we said off the top. But in terms of what's ahead, Nick, what have you got your eye on for the week ahead as we wrap up the first month of the year?
Yeah, so probably two things here, both related to Ethereum. Firstly is the final testnets for Dencun upgrade. They're happening on Jan 30 and then on Feb 7. So the two major testnets that we're looking forward to. If there's any bugs, any issues, then we expect that the Dencun upgrade to hit mainnet a little later while these bugs get worked out. So let's look forward to whether these run smoothly. And then we finally have BlackRock. They delayed their spot Ether decision, or more so the SEC delayed the BlackRock application. The next date to look forward to is, I think, May 23rd, where a lot of these will finally come up to two decisions. So hopefully we hear something before that, but I'm expecting these to kind of be sort of fade into the background until this May date. Would be very surprised to see anything happen before that.
Okay, thanks, Nick. And then moving forward to, just another one from me is to look out for airdrops, as Nick said, the Jupiter airdrop coming up soon. And then there's even uniquely been some projects that have launched and announced their tokens. However, there's some eligible participants even after the token has gone live, which is something uniquely that I've seen. In particular, I'm talking about Celestia stakers here that are going to be eligible for a certain airdrop, I would say in the coming week or two. Talking here about AltLayer and Dimension. These are just two projects that we have covered in our recent airdrops upgrade. So over at our page at collectiveshift.io/airdrops, we have an updated list of protocols and apps that we as a team believe are likely to announce a token at some stage in the future. And then for members, down the bottom of the page, we have a members only section highlighting our analysts' sort of top 4, I guess, actionable items that they're doing in pursuit of potential airdrops as well. So again, airdrops have really, really come back into the forefront the past 6 months or so, and that continues here as we head into February. What's on your mind, Nick, in terms of underappreciated or overappreciated?
I've got something that's overappreciated, and that's maybe Bitcoin pullbacks during bull markets. So I was looking over some interesting data, and it just really showed that maybe we're overappreciating these 20% pullbacks. We saw a 20% pullback with this ETF. It's hard to say all the nitty gritty of exactly when to define a bull market, but the consensus is we're very much into a new one, considering how we've bounced from the bottom. And if we just look at from the past bull cycles, that I think it's every 100 days from 2022 to 2024, about 70 days from 3 years ago, and then about 60-40 days from 2015 in terms of these 20% pullbacks. So we're always seeing these pullbacks in the market. We're seeing them at a rather frequent time frame when we think about it on 100-day, 40, 60-day timeframes. So nothing to fear in my mind. I know Checkmate's done some really good content for our members looking into this latest dip in the price of Bitcoin.
Yeah, that was a really informative post, and I'm sure sort of calmed down some antsy sort of Bitcoin holders who were concerned maybe about the drawdown. So yeah, it's all part of a typical bull cycle, as you said, Nick. And yeah, we'll see what happens in the week ahead. But for now, that is a wrap for this week. If you are looking for more insights, you would want to check out our weekly Shift newsletter, providing free weekly market insights every Friday. Subscribe at collectiveshift.io newsletter. That's collectiveshift.io/newsletter. Thanks for watching and see you next week.